What's up, millennials? In exchange for about 10 minutes of your time, today we're going to talk about the valuation of Canoo. Canoo was actually a company that was acquired by a SPAC under the ticker symbol HCAC, but is now trading under the ticker symbol GOEV. Very good ticker symbol, of course, GOEV. Before we start, a few things first, as always. First of all, I have not done extensive research about this company. Today, we're just going to look at the valuation according to the numbers from the investor presentation. Secondly, don't trust me, verify me. I'm just documenting my journey here. I'm just a random dude on the internet, not a financial advisor, just documenting my journey. Third, stock o'clock. These are very short 1-minute videos with news about the stock market. And lastly, I created a free Discord channel for you to join. If you want to join, then you can leave your name and email address and go to nesami.com/discord, and then I hope to see you in the Discord. Before we start with the valuation, a very brief quick overview of what Canoo is exactly. They're basically just an EV company with very interesting vehicles. As you can see, they have a few different types of vehicles that they're going to produce. They're not producing just yet. But as you can see, well, for example, the lifestyle vehicle, the B2C, the business to customer vehicle, is probably going to launch in Q2 of 2022, so somewhere next year. And then they have some other cars as well that they're going to launch in 2023 and 2025. The most interesting thing about Canoo, which I find interesting myself, is that they're going to offer a subscription model. So I'm really looking forward to seeing if that is actually going to work very well or not. But you, of course, want to know the valuation of Canoo, so let's get into that. As always, we are using a base share price of $10 per share, which is the number that I put over here. And then they are going to have an amount of 244.8 million shares outstanding after the merger. So that means that we can already calculate their pro forma market cap, which is basically by taking that share price of $10, multiplying it by the amount of outstanding shares after the merger, and that is going to give us a pro forma market cap of about $2.4 billion. We also see that they are going to have $607 million in cash on their balance sheet. So that means that we can now take that market cap of about 2.4 billion and reduce it with the net cash on their balance sheet. And that means that we're going to arrive at an enterprise value of $1.8 billion. So that basically means that Canoo itself, the company, is worth about $1.8 billion based on a share price of $10 per share. However, if we go into trading view, we can see that Canoo is right now trading at a dollar amount of $16.51. So that means a few things. That means that the market cap has gone up, because now if you multiply the price per share by the amount of outstanding shares after the merger, you're going to arrive at a market cap of about $4 million. And if you again take the net amount of cash off, you're going to arrive at an enterprise value of $3.4 billion. Now, to arrive at a fair market cap, a fair price per share, we're first going to look at their future valuation, right? Because right now, well, there's not a lot of things we can use to value the company. So we are going to use their future valuation. How are we going to do that? Well, we are going to do two things. We're going to need two things. First of all, we're going to take their amount of revenue in 2025, because that's the numbers that they have projected for us. And as we can see here, under assumptions, they say that in 2025, they expect to have a revenue of about $2.3 billion, right? And then they say, okay, if we can then actually use a multiple of 2 to 4x to get a future enterprise valuation. I think these numbers are actually relatively low, because usually when people are using revenue multiples, these tend to be a little bit higher, but for now we're going to go with these numbers to see where we end up with. So if we take a multiple of 2x, and we take this revenue of 2.341, so let's pull up our calculator, 2.341. If we first of all multiply it by the low multiplier of 2, we're going to arrive at a future low enterprise value of $4.682 billion. So that's what I put over here in my Excel spreadsheet, and also the number that's over here in the investor presentation. And if we then use a multiple of 4, we're going to arrive at a high enterprise value of $9.4 billion, right? So that's a high valuation also here in the investor presentation and also here in my Excel sheet over here. So if we then add a midpoint valuation, which is basically going to be the midpoint, the average between these two numbers, we're going to arrive at a midpoint future valuation of about $7 billion in 2025. Now we can take those future valuations and we can discount it back to the present. We need two things for this as well. First of all, we need a discount rate. Well, Canoo and the SPAC already helped us out here. They used a discount rate of 20%. And we need an amount of periods, amount of years to discount it back. We saw that they had revenue predicted from 2025. We're now living in 2021. So we need to discount it back 4 years in time from 2025 back to 2021, right? So that means we can now apply a formula. Let's first go with the low valuation of 4.682. And we're going to apply the following formula. First of all, we're going to multiply it by 1.2. The 2 here is standing for the discount rate of 20% to the power of 4, because of those 4 years we need to discount it back. And then we're going to arrive at a low current discounted enterprise value of about $2.3 billion. If we then do exactly the same thing for the high valuation, so 9.364 divided by 1.2 because of the discount rate of 20% to the power of 4 because of those 4 years back in time, we're going to arrive at a current discounted enterprise value for the high end of about $4.5 billion. And if you then take a look at the midpoint valuation, so the average between these two numbers we just calculated, you're going to arrive at a midpoint valuation of about $3.4 billion. We can now even go a step further and calculate the fair market cap and the fair price per share as well. Because as we now know, we have an enterprise value. And as we said at the beginning, well, if you take the enterprise value and add the amount of net cash, you're going to arrive at a market cap. Cool. So we now have these enterprise values. We know the amount of net cash, 607 million. So we simply need to put or take these enterprise valuations, add the amount of net cash, and that is going to bring us to a market cap, a fair market cap. For the low end, 2.3 billion plus 6 billion is about 2.9 billion. For the high end, we arrive at about 5.1 billion. And for the midpoint valuation, we arrive at a fair market cap of about $4 billion. Now we can go to the last step, and that is going to be to calculate the fair price per share. If indeed there are right now 244.8 million shares outstanding, we can take these market caps we just calculated, divide them by the amount of outstanding shares after the merger, and then we're going to arrive at a fair price per share. So if we do that for the low end, if we take $2.9 billion and then divide it by the amount of outstanding shares, 244.8 million, then we're going to arrive at a low valuation of $11.70 for the low valuation, $20.93 for the high valuation, and $16.31 for the midpoint valuation. Again, keep in mind that we have been using a relatively low revenue multiple, I believe, so these numbers could actually be a little bit higher, but for now, according to the investor presentation, these are the correct numbers. So we now know that the midpoint valuation is $16.31 per share, and that means that Canoo right now is actually fairly valued. But keep in mind, don't trust me, verify me, so always check for yourself if this is actually correct. And also take into account, we have been looking at certain assumptions, right? We have been taking a look at a predicted revenue. We have been taking a look at a certain revenue multiple. So if you change one of these numbers, then the entire calculation is going to change as well. And the fair price per share is going to change as well. Before you leave, let me know in the comments what you think about Canoo, about its valuation, about its cars. Really interested to know your opinion about that. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye.